In this video, we are going to complete the 15-2 work together. In the directions, we have two directions here. It says that we're going to journalize the entries for the adjustment data given in question assets. Number 1 says from a physical count of merchandise inventory, the December 31st balance is determined to be $96,471.25. Journalize the adjusting entry for merchandise inventory. So this number here that they're giving us, this is our ending inventory. We need to then look at our unadjusted trial balance to look at our beginning inventory. So when I look at my merchandise inventory, this would be my beginning inventory. So what I'm going to do, I'm going to actually go back. Okay, so 96. So when I look at this number here, 94, 845.31, and then I go back to this number is larger. So what I need to look at is, how do I make this number larger? That would tell me that I need to increase that. And how would I increase that? If this is the debit side and this is the credit side, I would need to increase merchandise inventory with a debit. So I'm going to figure out the number. So I'm going to take this number here, the larger one, 96,471.25, and then I'm going to subtract from it the smaller number, merchandise inventory here, so minus 94,845.31. The difference, $1,625.94, is what I need to increase merchandise inventory by. So I'm going to go into my general journal. I already have a bunch of adjusting entries in there. I'm adding on there, so the 31st. Now I said that I need to increase this number, and to increase that number I need to debit merchandise inventory. So I'm going to debit merchandise inventory for the difference, which was $1,625.94. And then I need to credit an account. Now, we don't have, like, notice on these adjusting entries, we have expense accounts that go with those, like prepaid insurance has an expense account that goes with it. We don't have that for merchandise inventory. This is where we're going to use income summary. Remember in the lecture I talked about this is the account that we use to kind of just throw things in for right now, and then we'll worry about those numbers later on. So I'm going to put income summary, and I'm going to credit for $1,625.94. Now, here's the thing about this one. I want to make sure that you're paying attention to this. This adjusting entry is not always going to be the same. So please don't just memorize a debit to merchandise inventory and a credit to income summary, because it will be different. When we looked in this example, we needed to increase merchandise inventory to make it the ending inventory. In the example at 15-2 lecture, it was the opposite. We needed to decrease merchandise inventory. If we needed to decrease merchandise inventory here, we would have credited merchandise inventory. So just make sure that you are paying attention to that. Increasing merchandise inventory would be a debit to merchandise inventory and a credit to income summary. If we needed to decrease merchandise inventory, we would flip this transaction. It would be a debit to income summary and a credit to merchandise inventory. So make sure that you're paying attention to that. Okay, I'm going to go back to my adjustment data. Number 2, it says a single note receivable is outstanding on December 31st. The 90-day 8% note was signed on November 22nd. Journalize the adjusting entry for interest receivable. Now, this is what I talked about in the lecture, where they just showed us the amount of our interest, and they did not actually show us how they got that amount. And now we're going to have to figure out that amount. So what I'm going to do is I'm going to go to my unadjusted trial balance. Now, I'm going to write some numbers down because that's going to help me. Okay? I'm going to look at my notes receivable. So I see that my notes receivable is at $8,000. Okay. That's what I'm looking at here. Notice it says a single note receivable is outstanding. Now, the rest I'm going to look at here. That note was signed on November 22nd. So here's where I need to figure out how many days of interest did I earn. I need to look at November 22nd through December 31st. That interest was earned during that fiscal period. So if you remember figuring out those dates, how many days are in November? There are 30 days in November. So I'm going to take 30 minus 22. That means I have 8 days of interest in November. Now, December, pretty easy. There's 31 days in December. So I'm going to add that to my 8 days of November. And that gives me a total of 39 days that I earned interest. Now I have to figure out how much interest then I earned. So I'm going to take $8,000, which was the note. Remember, I got that from my unadjusted trial balance on my notes receivable. There it is, the 8,000. Then I'm going to look at my interest rate. My interest rate was 8%, so I'm going to take 8,000 times 8%. And then I'm going to look at the amount of days that I earned interest. Now, that is 39 days. So now I'm going to take it times 39 over 360. What I get then for interest is 69.33333. So I'm going to round that and I'm going to do 69.33. So when I go to my adjusting entry, I'm going to put in my 31st. When I look, we see this interest receivable, and down under my income, we see my interest income. We are increasing our interest income. So to increase our interest income, we are going to credit that. We are then going to debit our interest receivable. So we are owed interest of 69.33. And then we have our interest income. We're going to increase that income that we earned of 69.33. Okay, so sorry, for some reason I just keep on getting an error whenever I try to submit it. I don't know what's going on with it, but hopefully you are able to submit yours when you are done with yours. If you for some if you for some reason have a problem, make sure that you email me, or if you have any questions, email me. You can now do your 15.2 on your own, and then you'll move on to the 15.3 lecture.